this session. An important factor to consider is that currencies go through periods of strength and weakness. For example, if you want to trade euro-pound during the London session, you need to ensure that one currency is weak and the other is strong. This is the only way euro-pound will experience significant movement. However, if both currencies are strong, the market is more likely to consolidate, making it difficult to trade effectively. So, it's best to trade a currency pair where one currency is actively traded while the other is closed. For example, trading euro-yen during the London session works well because the euro is heavily traded, while the yen is less active compared to other currencies. So the euro-yen price movements are influenced primarily by the euro, resulting in large price trends and movements that we want to see during the London session. Finally, in the New York session, the US dollar, Canadian dollar, pound, euro, and Swiss franc are the most actively traded currencies. Since the USD is involved in the majority of forex transactions, this session sees significant liquidity and volatility, especially in USD pairs. Additionally, the overlap between the London and New York sessions creates some of the most active trading hours of the day, leading to increased price movements and strong trends. A crucial factor to consider in the New York session is the impact of economic news releases. Major U.S. reports, such as the inflation data, interest rate decisions, GDP reports, and Federal Reserve statements, are often released during or just before the session opens. These news events can cause sudden spikes in volatility, driving the market up or down regardless of technical analysis. This is why it's essential to check the economic calendar before trading in the New York session. Another important factor to consider when trading forex is the correlation between currency pairs. Correlation refers to how two currency pairs move in relation to each other. Some pairs tend to move in the same direction, while others move in opposite directions. When you analyze euro-yen and pound-yen during the Asian session, you'll notice they tend to move in the same direction. This happens because the yen is the only currency actively traded in these pairs during this time, meaning their price movements are primarily driven by the yen's strength or weakness. However, if you look at Aussie yen, you'll see that its movement isn't as predictable as the other three. That's because both the Australian dollar and the yen are actively traded during the Asian session. This creates a kind of battle between the two currencies, leading to less clear price movement. Here's an important takeaway. When selecting trades, it's best to choose pairs where one currency is the dominant factor in that session. Pairs like pound-yen, euro-yen, and dollar-yen in the Asian session are ideal because they're influenced by just one actively traded